Kousgi joins us now, Managing Director and CEO of PNB Housing. Girish, good morning. Thank you for joining us. First, let's understand the big picture in terms of disbursements and in terms of the NPA cycle.
So if we look at disbursement, I think it is one of the best. We had the best quarter. We have grown disbursement by 28% and book growth is 16.2. In terms of NPA, if you look at March 2022, we had 8.12% and now it is down to 1.24%. So I think we've had a very good run in last 2 odd years and this trend would continue.
Do you see the price intensity moving now? After Reserve Bank of India's indication that NBFCs, in a sense, are enjoying higher spreads and they are going for top line and not focusing on asset quality, how do you see things moving after Reserve Bank of India's indications for NBFCs?
I think as far as PNB Housing is concerned, over last 9 quarters, we have been bringing down NPA. And even if you look at the current flow quarter on quarter, I think it has come down drastically. So slippages have come down, collections have increased, recovery has increased. So the asset quality is getting better quarter after quarter. So we are seeing a good trend on the mortgage side, and this must be true for most of the companies in the housing space.
What is your disbursement milestone? Because you've already reached about 3,000 crore rupees, right?
We did disbursements of 5,350 crores this quarter. And in next 2 quarters, we plan to do about 12,000 odd crores.
Okay. Where is the average? Can you tell us that how the average NIMs are likely to move in an environment where there is liquidity crunch and Reserve Bank of India has not cut rates?
So if you look at the NIMs, I think we've been maintaining at about 3.65 for many quarters now. We have guided the NIM of 3.5%. So if you look at this quarter, it was 3.68 and last quarter was 3.65. So we should be able to maintain this for next couple of quarters. It will be around 3.6 to 3.65. And in the scenario of rate cut, it's only a lag effect, which would be about, let's say, 40 to 45 days. And I think that should get corrected in some time.
Talk about, the one segment that you're focusing in on, and that's affordable and emerging market segment, right? Tell me, how is this going to really impact your NIMs? If you could just elaborate in what exactly is the plan for these two segments going forward.
So if you look at affordable business, we started 22 months back and we have reached a book of 3,000 crores in affordable, one of the fastest to grow in this segment. So it has taken off very well. And our plan is to get close to 5,000 crores by this year end. And by FY27, we want to get to 15,000 crores on the affordable book. In terms of emerging, it has reached a book of 12,500 crores. If you look at both disbursement and the book growth, it is pretty healthy. Emerging book has grown a little over 20% and the disbursement is 31%. If you look at affordable, book has grown by 300% and the disbursement on a YOY by 68%. So I think it is trending very well. Our focus on affordable and emerging is paying off and the yields are higher compared to prime in terms of emerging. So emerging, we plan to take the yields up by 75 to 100 bips higher than prime. In terms of affordable, if you look at last year yield, it was 11.4% and we have already reached 12%. And guidance for this year is 12.6. And from next year, yield on affordable would be 13+%. So it is really trending well. It's adding to our margins and this would continue.
I want to also talk about your corporate lending, which you're beginning to start in the second half of this year. How much will your book will be corporate lending and what kind of underwriting standards you think you're going to maintain for this segment?
So corporate book is now down to about 1,500 crores and retail is about 68,000 crores. So total book is 69,500 crores. Now we plan to start corporate in next couple of months. We were going to adopt one of the best underwriting standards, which would mean that quality business, which would also mean the yields are going to be lower compared to the industry average. yields are going to be in the range of 12 to 12.5%. So we are pretty okay with that. We want to build a very safe, secure corporate book. And at any given point in time, a corporate book would be less than 10% of the overall portfolio. Currently, it is about 2%.
Okay, Mr. Kousgi, so good to have you on the show. Thanks for taking the time out and speaking with us today.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.